Hey everyone, welcome back to my channel. If you are new here, my name is Carla, and in today's video, if you are a small business owner or thinking about start a business, understanding your financing options is crucial. In today's video, we are diving into a different small business financing option, providing example and recommending some excellent credit products for you. So make sure to hit that subscribe button and let's get started. First, let's talk about why business financing is important. Access to capital is essential for starting, growing, and maintaining your business. Whether you need funds for inventory, equipment, or expansion, knowing your financing option can make a big difference in your business success. There are several types of business financing options available in the market, each with its own benefits and requirements. So just be mindful about that. Double check, do your diligence, do your homework, see which one is the best at the moment for you. So the first one that I'm going to talk about is traditional bank loans. Basically, these are loans provided by banks with fixed or variable interest rate. They are require a strong credit score and solid business plan. Usually, the credit score that they are requiring right now depend of the bank. It probably will be your personal because they need kind of a personal guarantee, or they need to double check that they back you. Depending if you're a startup business, you don't have enough credit, so they might get or need your personal credit score. The second one is SBA loans, which is stand for Small Business Administration Loans. In these type of loans are government backed and offer favorable terms and lower interest rates. Example includes like the SBA 7A loans and the SBA 504 loan. Double check about those. Do your homework, do your research about to see might be one of these can be a good fit for you. Usually they have a lot of requirements or paperwork that you have to fill out, but I mean it's worth it. Another option is business line of credit. These provide flexible access to funds up to a certain limit. You only pay interest on the amount you draw. This is why I like the line of credit because you get approved and you can use this over and over and over and over again. So basically, you pay the interest on what you use. Let's say that you got approved for $1,000, just to keep it low and keep the example simple, and you just use $200 of that. So basically, you're gonna pay interest on those 200, not the $1,000 that you got approved. And as soon as you pay it, you can reuse it. So that amount is there for you. Usually, this type of line credit product has a good or better interest rate than credit cards. So just keep this in mind. So it's good to have it handy for whatever needs that you have. I mean, unexpected expenses or things like that. Another one is equipment financing. This basically is specifically used for purchasing equipment. The equipment itself often serves as collateral. So this is important too because if you have, for example, a brick and mortar business and you need a lot of equipment, and even if you have an online business, you might need some products that you need in your home office or whatever you have it, like let's say a laptop or a printer or something like that that you need. This can count for this specific equipment. Another one is invoice financing. This one allows business to get advances on their outstanding invoices. So there is a few institutions that offer this type of financing. So just double check about it. Again, this has some kind of requirements that you have to go through them because you have to present your invoices, and based on that they might lend you some money to cover for this, and obviously they're going to charge you some interest and go from there. But it's something that you can there is available in the market. Another one is merchant cash advances, a lump sum payments in exchange for a percentage of future credit card sales. So this is another thing that you can consider. Number seven is a crowdfunding. This raising a small amount of money from a large number of people. Typically via online platforms, you can do this. I mean, this is really useful. Nowadays, actually is very popular. So keep eye on this one. This could be a good choice too. And another one is grants. Grants are non-repayable funds provided by the government bodies or private organizations. So if you need some grants or something, again, these also have some requirements, some paperwork, application things that you have to deal with. But again, it's worth it. And these are not repayable. So, I mean, why not? I mean, you can go through the process. If you get approved, you have an amount that you can use toward your business to get your business, help your business grow or buy some equipments or something like that and help out, and you don't have to pay back. Now, here are some example and recommended products for each type of financing. So on the first one was the traditional bank loans, which there is a Wells Fargo, a small business loan, Bank of America Business Advantage term loan. So double check those two about these. That way you can check if it's something that you can deal with. The next one is SBA loans. I mentioned this. The two example is SBA 7A loan and the SBA 504 loan. For business line of credit, check out the Chase Business Line of Credit or Blue Vine line of credit. For financing, for equipment financing, you can check out National Funding Equipment Financing, and also you can check out Crest Capital Equipment Financing. For invoices financing, you can check Fundbox or also Blue Vine Inbox Factoring, which also is the same company as Blue Vine that has this option too. So check this out. For merchant cash advance, you have a Square Capital, you have PayPal Working Capital that can help with this specific type of financing. For crowdfunding, you have the Kickstarter and Indiegogo. So just double check about this. And for grants, you have a Small Business Innovations Research, which is SBIR program, and you have also National Association for the Self-Employed, NASE growth grants. So just double check these two. Like I said, these are not repayable. So if you get approved for this, it might take a little bit. You have to, like I said, you have to go through a process. But if you get approved, you don't have to worry about repay. And also you can take advantage of this, pay off some stuff, buy something that you can that can help to your business to grow, to have more sales, some marketing, whatever you need. Just take advantage of this type of financing. One of them, it could be good for you right where in the stage that you are right now. Quick break here. If you're finding this video helpful so far, please like this video, subscribe to my channel, and hit that notification bell for more valuable content. Also, join my free VIP group. I will leave the link in the description box below for more for exclusive tips and resources. That I will have available in my community. So I will see you inside. Coming back to this subject, to get approved for this type of financing options, here is what you need: business documentation. So you need your EIN, business license, and article of incorporation. You might need some others, but I mean, every one of these type of financing, you will have the requirements. So I'm just gonna mention the most common ones. You also will need your personal identification, which is your driver license or passport. You will need your credit score, which while some products require a minimum personal score, typically between 600 and 680, others focus more on your business financial health. And you have to be mindful because maybe if you have a good business profile, good business history, you might just go from your business side and don't have to touch your personal. Also, you will need financial statements. So banks may ask you for your business financial statements and tax return. This usually is if you are requesting, or your desirable amount that you want is a large amount. I don't know, thousands of dollars, but usually is they have like a minimum that you can apply for without these exactly documentations. Most of the financial institutions that have that option, but there is others that after certain amount of money you need to present or to provide the financial statements and tax returns, usually 2 years or something like that. So double check about that. And also, it's good that you have a business plan. You need a detailed business plan. I mean, this can impact in a good way, significantly improve your chances of approval because they see that you took the time to put together a business plan, like with all of your visions, your statistics, your numbers, your projections. So they will see that you are really into that and you have a plan. So that way they are sure that you can get this money per your business plan, and you will be able to pay back and they will be good to go. Most lender will check your credit score with one of the major credit bureaus. It could be Equifax, Experience, or TransUnion. Some use a combination of these or additional sources like Dun and Bradstreet for business scores. So be mindful that they might check a couple of them on the personal side, or maybe who knows, depends of the institution, can check all of them, but also they can check and inquire in your business size too. Make sure to check which bureaus the lender uses and monitor your credit report regularly. That way you know what are your score before you start applying and get those inquiries on. That way it's better that you can plan ahead and build up your credit to their minimum or get approved. So work on the exactly the bureau that they need if you want to establish that and get approved. Let's look at the pros and cons of some of these financing options. So the traditional bank loans, the pros is they have lower interest rates and longer repayment terms. The cons is that require a strong credit and lengthy approval process. The SBA loans, the pros is favorable terms and lower interest rate. The cons usually is a strict eligibility criteria, extensive documentation. I mentioned this before. So usually this type of loan, because it's government related, so they are really picky on it, and they usually require a lot of documentation regarding your business, the application, business plan, and some other stuff. So just double check about this because like I said, it worth it, the terms and the interest rate, but it could be really extensive process. But if you get approved, you can deal with it. The next one is business line of credit. The pros is flexibility, pay interest rate only on what you draw. Basically, like I explained before, is basically the interest rate will apply to the amount that you use, not the total amount you got approved. So this is a great deal on business line of credit. The cons is variable interest rate can be high, may require collateral. So just be mindful of this. The next thing is equipment financing. The pro is preserve working capital. Equipment serves as collateral. So if sometimes that is a reason that you cannot get approved for something because you don't have what to put as collateral, and because the same product that you are trying to finance or purchase can serve as collateral, you might have more opportunity to get approved. On the con side, can be expensive if equipment becomes obsolete. So also be mindful what type of equipment you get. For the invoice financing, you have on the pro side the quick access to cash and no collateral needed. On the con side, there is high fees and can affect your customer relationships. Merchant cash advance. The pro is fast approval, flexible repayments. The con is high costs can lead to cash flow problems because of the interest rate. The crowdfunding, the pros is no repayment requirement, invalidates market demand. The con side is not guaranteed to succeed, can be time consuming. Grants, the pro is you don't have to pay this back, so this is amazing. And another one is can boost credibility and add a lot of value to your business. So on the con side is highly competitive and strict eligibility criteria. This is kind of close to the SBA loans too, because again, there is government involved here. So it can be tedious, but I believe it's worth it, depending on your situation. So just keep this in mind. So to maximize the benefit of business financing, maintain good credit, Both personal and business side, credit score matters for this type of funding and this type of financing. Number two, keep detailed record. Accurate financial statements and business plans can improve your chances of approval. So also be organized. Keep your everything related to your business in a folder in your computer or whatever you decide to have it, but keep it as organized as possible because if it comes for you to have to deal with this type of applications for financing, for funding, for whatever, you have everything where you need it, easy access, and boom, you get it done. Another thing is use funds wisely. Don't get crazy when you have the money approved or in your account. So invest in areas that will generate growth and revenue. That way you can be able to pay back that money and more, meaning get more revenue or get more money back. I mean, enough to pay back and have some stuff done. The next one is that diversify your financing. Use a mix of financing options to reduce risk. Don't put all of your egg in one basket. So just keep this in mind. Let's take a look at a couple of real life example. So example number one is a startup uses an SBA 7A loan to cover initial costs and a business line of credit for managing cash flow. They also use equipment financing to purchase initial machinery or initial equipments or products or whatever they need for their business. That's basically is a good example for a mix of financing options and have all of them in your credit business credit report. Example number two is a growing e-commerce business leverage invoice financing to get immediate cash for pending orders and uses crowdfunding to launch a new product line. This is also a good example. So keep this in mind and remember that understanding and choosing the right financing option is crucial for the growth of your business and success of the business. So by exploring the various options and leveraging the right products, you can ensure your business has the capital it needed to drive. So keep this in mind. And this is an amazing opportunity. So just be mindful, do your homework, check out which is going to be your best option, and you can go from there. Thank you for watching. If this video helped you somehow, please give us a thumbs up. Share this video with your business owner that you don't know that this information might help them out. And don't forget to subscribe. Drop any question about this subject or your favorite financing option in the comment section below, or even your experience. Also, check out my free VIP group. I will leave the link in the description box below for more exclusive insight. So I will see you in the next one. Bye.